Welcome to it. Time to have a look at what happened on the Asian market side. We're going to kick off with that particular side because we did see those markets closing a little bit mixed. Of course, investors were digesting news of China's PMI figures that officially came out today. When we look at the actual bourses, the Chinese shares closed mostly higher with the Shanghai Composite up 0.4%. The Shenzhen Composite also in positive territory, up nearly a full percent, around 0.9%. And when we look at what was happening in Hong Kong, over on the Hang Seng side, that fell marginally 0.2%, and the Nikkei in negative territory as well, down 0.9%. European markets mostly struggled for direction, and of course this is as investors try and reconcile the fact that China's economy might be leveling out, especially when it comes to that economic recovery that we've been talking about for over the past few weeks. And of course there's still the global inflation risks that are still lingering in the background. Do remember that the UK markets are closed for the spring bank holiday. However, when we look at markets in Japan, in Germany, German DAX down 0.25%. The French CAC also in negative territory, marginally flat. US futures at this point also were struggling for direction. But again, the US markets, they're closed for Memorial Day. We're going to be talking with our market watcher to get a sense of how all of these themes are playing out globally and in South Africa, especially as we are in the middle of results season. But to get into that, let's talk to our market watcher, Gary Booysen from Rand Swiss. Gary, thank you so much for your time. We'll try and get that line with Gary. But in terms of Gary, can you hear me?
Yes, I can hear you fine.
Awesome. Thank you so much. So, let's look at JSE performance right now. Anything that caught your attention?
Yeah, so it's a little bit of a quieter day today, obviously with the US closed for Memorial Day holiday and the UK closed for a spring bank holiday. But with at least Asia slightly positive, we're seeing the resource sector under getting a huge lift. So we've got resources up over 1.8%. And it's really being led by Implats, Amplats, Sibanye-Stillwater, so a lot of the platinum miners. We're also seeing decent gains in gold as the gold price holds above $1,900 an ounce. So we've got Goldfields up almost 3% and Anglo Gold also up over 2%. So it's really a story of resources. The industrial and the financial index are both quite flat. That's a little bit of a mixed bag. We had a voluntary trading statement out of Standard Bank, which is lifting that share price. But the other banks and financials under a little bit of pressure today.
So we're in the middle of results season. It kicked off about a week ago. Are there any particular companies that you're looking out for, or anything in particular regarding how those particular companies, navigated the pandemic?
Yes, I think that's exactly what we're seeing in a lot of the results. So as you said, there's a lot of interesting companies coming out at the moment. Certainly, I think everyone is looking to see what's going to happen with Huge Group results today. They had a trading statement come out a couple of days, but they're obviously in the news because they're trying to do an all-scrip deal to buy Adapt IT. And that's they're in a bidding war with Valaris, which is a Canadian company overseas, and that's kind of boosting up Adapt IT's share price. It's also generating a little bit of interest in Huge Group stocks. So while the trading statement from Huge Group didn't look too good, it'll be interesting to see a little bit more detail in their results as well. And then, of course, we're just looking at the usual. Like I said, I'm normally interested in the financials and the banking stuff because that's the sector that we play in. So it was interesting reading Standard Bank's voluntary update today. It just shows that I think the South African economy is recovering well from the pandemic, and we're seeing that in a lot of the asset management numbers. We're seeing it in the likes of Coronation 91, and we're just seeing the idea that the provisions that a lot of these financial services players have put in place were not totally required, and they're announcing at least slightly better numbers, and I think that's also helping just to stabilize share prices. And while we have got the financials down today, we saw a huge run up into the end of last week in both the banks and the retailers.
So tomorrow we have the OPEC Plus meeting taking place where they will most likely discuss whether to turn the taps on in the coming months. Is there anything that you're looking out for in terms of the global economic recovery, whether it's the OECD report that will sort of influence or rather give direction to where you see demand recovery coming through?
That's an interesting question. So, obviously the OPEC report, everyone is expecting them to increase output. So, today, with the public holidays, the Memorial Day public holiday in the US, this is actually the official start. This weekend is the official start of the what they call the summer driving season. And that is really where you hit peak demand in the US and the Northern Hemisphere around oil consumption. So I think the expectation at this stage is for oil demand internationally to return to around 100 million barrels per day by around the third quarter. And I think it's going to be very interesting to see what the projections OPEC has around demand recovery, and certainly how they're going to influence supply based on that. So, with the drawdowns that we've seen in US crude inventories, just the amount of demand that's come through the market, I think this is probably the meeting that you're going to see more significant output increases. I think they've got to peg, like the consensus is around 840,000 barrels per day increase from the OPEC plus nations. But that's what we're going to find out. So that's the expectation, and we'll see what the reality is in the next couple of days.
On Friday, we have U.S. non-farm payrolls. Are you expecting those figures to be significant or to hold any weight?
Well, they always hold weight for us because it's one of those numbers that creates the most movement in financial markets. If you look historically, it's the number that everyone looks to see how Fed policy is going to change, because it obviously gives you a very good indication. It's the monthly number on the U.S. labor market. Now, what we had last year was just at least last month, April, was a massive miss on expectations. It was the largest miss in the history of the numbers. So. Certainly, I think everyone's going to be paying attention to it this week. While the expectation is that no matter what the number comes out as, it's not going to influence Jay Powell and the Federal Reserve to taper more quickly than they currently are planning to. But certainly, it's going to give us a better indication of what's happening in the U.S. labor market, and that's absolutely crucial to generating your inflation expectations going forward. So we'll definitely be watching it. It might not be as exciting as last month's number, but you never know. That's what we're going to be looking to find out.
Before I let you go, are there any other events or company results that you're expecting in the next week or so?
There's a lot of stuff coming out. As I said, we're kind of in the middle of earnings season. Like as I said, very, very interested in seeing what happens with Adapt IT, at least with Huge Group today. But I think just looking at some of the property companies as well, I think is going to be interesting. So we had Liberty 2 Degrees coming out and just saying that their mall traffic was back to pre-pandemic levels. And I'm very interested to see, just given the valuation around the property sector, how some of our property companies, we've still got Vukilia as reporting as well. So there's a couple of property companies still to come, and just see how they are handling the pandemic environment, and whether they're bouncing back, whether they're seeing their occupancy rates rise, and whether the country really is getting back to work, or whether they're still under a lot of pressure. So I'm kind of looking forward to a couple more property reports.
All right, Gary, thank you so much for your time. That is Gary Booysen from Rand Swiss taking us through what he's expecting over the next coming days or so. We're going to take a quick break. When we come back, I'll have more news, and I'll be with you until 3 p.m.